you struggling to take your trades at your high probability trade locations? Even though you have a great system, there is a problem within you to enter the trades due to fear, anxiety, what will happen next, like these negative situations or negative thoughts. This video is for you because most of the traders who are in the markets at about 1 year or more, they have a strategy or a system, but they can't take the strategy to the next level to get the profits. Why? Because they can't enter the markets even though the trade is executing in their way. For example, I will tell you here. The pre-market analysis I have marked here is these three red lines. Okay. Now, what the novice but some experienced traders do here is, even though they see a red candle here, they can't enter the trades, thinking that what will happen next. Maybe it could come to my stop loss area and triggers my area and it go back in that direction. Maybe there's some other issue that is triggering my stop loss. Maybe Nifty is taking support at some area and it is taking my stop loss. Like this, so many issues are there. These are called mental blocks which stops you to execute your trades at the right time. Whenever you are at the high probability trade locations like this, you have to enter once it gives you the signals and it closes below this. No matter what, whether it is a stop loss triggering trade or profit giving trade, the first thing you have to do is do your pre-market analysis, take action at your high probability trade locations. For example, this is the place where I have marked that I want to be bearish in the market, and if I see a red candle like this, I have to jump in first. If the stop loss is little bit high, you have to do the position sizing, but you have to enter the trade. Whatever it may be, maybe it is stop loss triggering, maybe it is profit giving trade, your duty is to enter the markets at the right time. Now, what is the right time? The right time is after the close of this first 5 minute candle. Why? Because when you see this candle, it is having a long wicks, right? You can see here, this is having a long wicks, which is called the support. Sometimes I only say that this is going to be a support, so this could be a bullish candle even though it is a red candle. But according to the situation, you have to act upon it. What is that situation? In this particular day, I will be explaining here. This is my post-market analysis of 27th September 2023. And if you see here, even though it is a bullish candle, the trade starts at our high probability trade location, which is a bearish location. And see, this is also a bearish location. When Nifty and Bank Nifty are in the downtrend, they are opening at our pre-market levels, high probability trade locations. This is the 100% good criteria to enter the markets. Sometimes maybe Nifty is not giving such good signal, but in a month, at least 4 to 5 times both the indices are like this. When this happens like this, you have to enter the trades with good position sizing. Okay, this is the risk you have to do. When you are afraid about taking the risk, this profession is not for you. You have to have a system, a plan, then execute it without any doubt. If you are feeling anxiety about losing money, just do it with one lot for a good period of time. Then you will get confidence about the system. Now, let's check the price action throughout the day. Like this is our post-market analysis. See, this is the first 5 minute candle which closes below this area. Even though this is having a wicks, I prefer to enter the trades at these two levels. Why Bank Nifty? Why not Nifty? Because Nifty has a big stop loss. Once it closes below this line, what I actually do is I do put my stop losses above the entry candles. Most of the time, 99%, I do place my stop losses above the entry candle. This is a bearish candle, right? Above the entry candle. This is a big candle. So you can go with Bank Nifty here. Place your stop losses above the entry candle and wait what will happen next. See what happens here. After some consolidation, why consolidation? Because in this candle, after the close of 920 candle, this Nifty is at the support. When support happens, what happens? When we are using some system, we are bearish in the market. Likewise, some other traders are using some different systems and they want to be bullish in the market. If everybody stays bearish or everybody stays bullish, there is no point of trade here. There should be two different groups to fight with each other to win only one person. That's how the trading works. Why this consolidation happens here? Because there is an immediate support here. When immediate support happens, the traders who trade the demand zones enters the market at Nifty and they want to take the price in a bullish way, but they fail to do it because the overall market sentiment is negative today. Okay, this is how the trade works. Now let's go to the Bank Nifty here. I always interested in demand zones, and this green line is a demand zone and this green line is a demand zone. Now you have a point that why this demand zone is not respected. When the sentiment is negative, no levels will be respected. The panicness, the fear comes into the market, no levels will respect. When the panic and fear is in limited amount, then only any indicator, any strategy will be there. Okay? If in this area the panic is high and it closes aggressively below the demand zone, then what happens? Listen this carefully. Then what happens? The traders who trade the demand zones will enter the market because they see that there is a big bearish candle and they want to be bearish in the market. I will tell you an example, a good point here. See, whenever there is such big bearishnesses, the people who want to buy the index with much higher price, okay, much higher price. That's why they put their market orders. When such big market orders are there in the market, there is a chance to have the gap here. See here, for this candle, the close is here, right? The close is 43,344 and the open here is 44,337. Around 10 points gap. How these gaps happen? Because there is a pressure in the market. When these gaps happens, most of the time there is a follow through. For example, this is a bearish candle, a gap happened here, then the follow through is a bearish candle. Sometimes it is with bullishness, a big bullish candle happens and there is a gap. 90% that gap is going to be a bullish candle. Okay, this is how actually we have to learn, read the charts. Now see here, at the same time, this is the 955 candle and see what is this candle. This is also 955 candle. Now there is a gap here and see here also there is a gap. Train your eyes like this. Okay, it has closed at 19,605 and where it opened 19,602. There is a gap. Did you see any gaps between like this in any candle? No, right? This is called as the gaps when appear in the market when there is a big pressure. Okay, now let's see what happened here. Then it forcefully closes below this level, right? This closes below this level, below the S2 and there is a pressure again. I want to discuss about this. In yesterday's pre-market analysis, I haven't discussed about this, but let's go to the September 6th chart and see what is this level. See, at the September 6th, the market opens with bearish indecision candle, and there is a big fall happening here, and suddenly it took support at this area and goes in the bullish direction. These are called demand zones. When you go here and see what happens here is exactly at this demand zone it is taking support. Okay, exactly here it is taking support, and see, there is a big bullish candle here. The traders who trade the demand zones enters the market. There is a fall. Why this big follow through happen? I have an insight, powerful insight here. Let's see here. Once it closes below this area, again it pushes the price like this and closes above the 20 EMA. Okay, closes above the 20 EMA. And this demand zone becomes the support here, and the traders know that once it closes above some level with the 20 MA, this is going to be a strong support and they enters the market. This is how this has happened. Likewise, the sentiment of the market from bearish to bullish slowly moving. Now what happened at this time exactly? I'm going to explain here a concept of red candle high breakout here. Okay, red candle high breakout here. Whenever there is a red candle, and after some bearish candles, it is moving like this. And crossed this red candle high. See, this is the high, and crossed this red candle high from below. This is called red candle high breakout strategy. When this happens, the traders who are there in the markets with the bearish view, they put their stop losses at this area. They put their SLs, and those SLs triggers here. When it triggers, what happened? The breakout traders enter the market. Now see, this is the breakout. This is also a small gap, okay, because this is happening, this candle opened below the previous day low. So the gap traders also enter the market. Even though this is very small, this is the catalyst here. Okay, this is the catalyst here. When it closes with the bullish pin bar, what happens here? The traders will enter here. Breakout traders will enter here and made a big bullish candle. Here see this. This is the area where I want to be bearish in the market. Now what happened? Here this is a bearish candle here. See, this is a bearish candle here, and we want to be bearish here in the pre-market analysis. Okay, bearish here in the pre-market analysis. We enter here and we aim for the next pivot. So on this day, this has worked out in Bank Nifty, and this is also worked out in the Bank Nifty. We have two successful trades as per my pre-market analysis. Let's go to the Nifty here. The pre-market levels are these three levels, and this level has respected, and at the demand zone it wants to take the support, but overall negative sentiment pushes the price down, and there is a gap between two candles, and again once it closes below this, the breakout traders enter the trade. There is a more push here, and again this support is I'll show you what is this support. Let's go to the 30-minute time frame. See, this is the support. See, this is the support it took there. 19,553. Let's. This is 19,551. This is how exactly trading works. Okay. Again, this demand zone. Let's see it. This demand zone is acting as the support for this day. If some traders don't know about this demand zones, they will wonder why suddenly the price is taking support at this area. Even though there is a minor change here, the support is took from the demand zone. Okay, see, there is a big bounce here. Next time the price comes here, what we should do? When the price comes here and made a bullish candle, we can put the stop losses here, enter after the close of the candle, aim for the 1:2 or 1:4 risk rewards. This is the place where you have to put your stop losses. And remember, any strategy is not foolproof, and we should place our stop losses. Otherwise, the market will have their own way of giving us the surprises. Okay, not every trade is our trade. Thank you so much for watching my videos. If you are watching till this time, I know that you like my content. As you are watching this, I want to reward you with some useful things to you. The reward is you can get the back testing charts of August, September as well as June, July also. You can mail me at tradingtricks44@gmail.com. I'm going to give this in the description section. If you want the charts for back testing, I'm going to give it for you. Thank you.